What's up, psychedelic investors? My name's James, and you're watching The Psychedelic Investor, your number one news source for psychedelic stocks and everything MindMed. Today, we have a little bit of breaking news for you in this very short episode. So this morning, MindMed announced they have raised another $19.5 million from Canaccord Genuity Corp on a deal that is set to close tomorrow. And the company is selling 6 million shares of their company for $3.25. As well as this, if in the next 3 years the price of MindMed goes above $6.90 for 5 consecutive trading days, then Canaccord has the right to buy another 3 million shares for $4.44 each. So I could imagine this happening if, say, let's say MindMed gets accepted to the Nasdaq sometime recently in the next couple years or the next month or whatever, and their stock price just kind of skyrockets. Then Canaccord would have the right to buy another 3 million shares for $4.40, which at that time would be a steal for them. And just as a quick note, Canaccord has been the group that's been doing a lot of the financing for MindMed up until now. They've been either the major or the only financer in almost all of these kind of bought deals that we've been talking about up until this point, including the big one they had a couple months ago of around like $150 million or whatever it was. So the main question is, why is MindMed doing this? Why are they raising another almost $20 million right now? Well, according to the press release they put out, what MindMed said was, the net proceeds of the offering will be used for further investment in Project Lucy, the microdose LSD program, and Project Albert, which is now integrating MindMed's most recent technology acquisition, Health Mode, to build a comprehensive mental health platform to deploy psychedelic medicines and for general working capital purposes. So, in my opinion, at least, I think the last 4 words there, the general working capital purposes, are the most important here. And with that, all that MindMed is saying is that they're adding this money to their war chest. It's going to be used to pay salaries. It's going to be used to pay for the clinical trials. It's going to be used to pay for whatever, the floor space. They're just adding this to the money they already have. And yeah, so this is super important. It just means that their war chest is getting bigger and bigger, which leads us to the question of, is this good news? Or is it bad news? And right off the bat, I know a lot of people, whenever dilution happens, they tend to think of it as negative news. And I'm just going to explain that to you for a little bit right now. So basically what happened here, or in any deal like this, is MindMed kind of just printed another 6 million shares. So there are 6 million more shares today than there was, or tomorrow rather. There will be 6 million more shares tomorrow than there is today. So what that means is that, let's say MindMed has a market cap of $1 billion. Let's just use it for ease of calculation here. Now, all of a sudden, that $1 billion needs to be divided by an extra 6 million shares. So each individual share that you or I own is now worth proportionally a little bit less. And because of that, a lot of people, whenever they see something like this, they think that it's very negative. Oh, I did nothing wrong, and yet my stock price is now lower. But like, that's just kind of the name of the game, to be completely honest with you guys. MindMed is a pharma or a biopharma company right now that has 0 revenue, and they're going to need to continue to raise revenue to do everything they need to do. Clinical trials are expensive. All these different programs that they're running are expensive. Having dozens of doctors and scientists is expensive. And MindMed has no revenue at the moment, so they're going to need to continue to raise capital. So this won't be the last deal like this. Over the next, let's say, 5 years, until they really start taking off and selling their medicines, we're going to see lots of capital raises, and that is normal. Ideally, what we would like to see happen is that while they continue to do these capital raises, at the same time, we get good news about their clinical trials, we get other sorts of good news, so the value of the company is rising as the dilution is happening. But just getting back to the idea of dilution, you guys just need to understand that 1, it's not a bad thing, and 2, it will continue to happen. It's just the nature of the game when investing in biopharma companies. So my first kind of impression that I had when I read this news this morning was I was a little bit annoyed that they did this week as opposed to last week. Last week their stock price was much higher at over $4 a share, and now it's at $3 a share. And by the way, guys, for this video I'm going to be using the Canadian terms. I know I usually use the American terms, but because this deal was done in Canadian dollars, it's just easier to keep everything in Canadian dollars. So yeah, last week their share price was over $4 a share, and now it's around like $3.20, depending on when you guys see this. It might be a little bit different, but I mean, it's unavoidable, guys. They probably started the negotiations for this deal last week, and yeah, it sucks that their stock dipped a little bit or quite significantly, but they don't have a crystal ball. They didn't know if this week their stock price was going to be higher or lower. It's just the nature of the game. So getting into thinking about whether or not I think this is a good play or a bad play on MindMed. So I actually sat down and I thought about this. I talked about this with my producer for about an hour, trying to figure out whether this is good or not. And we came down to the opinion that this is probably a very prudent financial move on MindMed's part. So as I'm sure lots of you guys are very aware, there are a lot of very smart people right now saying that we are on the precipice of a gigantic market crash, the likes of which none of us have ever seen before in our lives. And part of the reason they're thinking this is because, well, frankly, the market has been acting absolutely insane for the past year. We are in the middle of the worst health crisis that we've ever had before. Unemployment sucks. Companies are going bankrupt left, right, and center, and yet the stock market, is at the highest it has ever been before in history, and the pace at which it is increasing is accelerating. So if you look at that little crash we had earlier this year, and if you were to draw a straight line from before the crash to after the crash, it's actually increased the rate at which these stocks are going up. And then when you add on top of that the fact that 40% of all money that has ever existed in the United States has been printed or created in the last year, we're really living in a kind of wacky time, and frankly nobody really knows how this is going to affect the wider market in the coming years. We're kind of just winging it as we go as a society right now, trying to respond to the coronavirus crisis. And the fact that the market is so high, to many people, seems a little bit absurd. So they are predicting a frankly atrocious market collapse. And again, I have zero idea if this is going to happen or not. Maybe a year from now, stocks will be double what they are now, and we'll be laughing at the idea of a crisis. Or maybe a year from now, stocks will be, who knows, 40% of what they are now, 30% of what they are now, and we'll have just absolute atrocity of an economy. It's very possible, and lots of smart people think that this is the route that we are going down. There's also a lot of parallels between what's happening right now and what happened in 1929, when they had their market crash that lasted for quite a few number of years, like 5, 6, 7 years, if I remember correctly. Yeah, so there's lots of parallels of what's happening now and then. And like there's this saying that, or this quote rather, that history doesn't repeat itself, but man does. So I think it's very likely that we could be in this scenario. So I'm kind of rambling a bit here, but bringing it back to the bought deal financing and why it's important and why I think that MindMed is doing this right now is because they see the same things we do. They see that it is very possible, albeit not certain, but very possible we're going to enter a market crash very soon. And if this happens, MindMed will not they will not escape from it unscathed. Like every other company, their stock price would tank if we saw a total and complete market crash. So if this happens, MindMed wants to make sure that they are in the best financial position possible before the crash happens, in order to withstand the effects of this market collapse in the coming years. So we know from previous financial statements that MindMed spends around $10 million a year, though of course that's going to increase as they hire more people, do more programs, etc. But still, we're going to use that $10 million a quarter number. So based on this, we can see that MindMed, with this deal, they now have enough for an extra half a year of financing before they have to go raise more money. And again, earlier this year they raised like $140 million or whatever the number was. So they have a very large war chest right now that would allow them to to continue what they're doing for several years without having to raise capital. So again, they raised this money at $3.25 a share, and if there is a giant collapse, which again, by no means is certain, but if there is a giant collapse and let's say their share price goes down to $1 for a prolonged period of time, I'm just pulling that number out of my ass, I have no idea what it would go down to, but let's say their share price goes down to $1 for a prolonged period of time because of the wider market conditions, MindMed would not want to have to go and raise capital to fund their existence essentially at $1 per share. Especially if they believe themselves to be valued intrinsically at a much higher value. So basically, it is smart for them. What I'm trying to say, at least, is, and this is all my opinion, of course, I believe that it is smart for them to be raising money now at around $3 a share or whatever they end up being in the next couple weeks also to kind of just make their war chest larger, to ensure that they have the money to withstand any sort of market collapse, even if that collapse has a period of, let's say, 2 or 3, screw it, let's say 4 or 5 years. Like, nobody has any idea what's about to happen, and that is a very real possibility. So MindMed wants to make sure that they have enough money for any possibility. And going in this vein, I wouldn't be surprised if in the coming weeks or months, assuming their price stays around where it is now, we see more of these bought deal financing agreements, probably with Canaccord again, to just continue to make their war chest larger, to continue to stabilize their financial position so that they can do all the work that is needed in the coming years, even if their stock price is low because of a market crash. And they won't have to be going and begging for crumbs and little cents here and there of money because their their stock price rather would be low. So that's kind of what I'm thinking is the rationale behind this deal, is just kind of guarding against a possible market crash. So that's kind of all for this video, guys. Sorry for the rant. You kind of saw how the insides of my mind was working. I was going like all around. But that's just kind of what I'm thinking about this deal right now. And just a reminder, of course, this is not financial advice. I'm not a financial advisor. This is just my own opinion based on the information I am seeing. Always do your own due diligence on all stocks that you're going to buy. And of course, if you enjoyed this episode, please like and subscribe. It will really help the channel out. So that's all for today, guys. I hope you enjoyed the episode. If you did, maybe I'll have more unscripted rants in the future, but we'll see. Maybe this will be a total disaster and I will get 1,000 dislikes and I will never do one of these videos again. It's up to you guys, so I will see you next time. This is James signing out. I'll see you next time.